Welcome back to another Cash Control 360 Explainer. Today, we're diving into something literally everyone has to deal with, our master blueprint for rapid credit improvement. Now, you might be wondering, why the urgency? Well, think about it. Your credit score is basically a vital sign for your entire financial life. It dictates so much: loan approvals, getting that rewards credit card, your options for car financing, whether you can rent that apartment you want, and crucially, the interest rate you'll actually pay on borrowed money. It's not just some random three-digit number. It's the absolute foundation of your financial freedom.
Okay, let's dive into this, but real quick, a tiny reminder before we break down the strategies. This explainer is strictly educational content, right? It's not financial advice. We're just here to show you the mechanics of how credit actually works under the hood so you can make informed decisions for your own life.
So let's frame the absolute stakes of what we're talking about today. The contrast here, it couldn't be clearer. A good credit score actively saves you money. It unlocks those lower interest rates and way better terms. But on the flip side, a bad credit score, that is a terribly expensive roadblock. It literally costs you money every single time you need to borrow, rent, or finance. We're talking a difference that can easily amount to thousands, and I mean thousands of dollars over a lifetime.
Now to fix it, we first have to understand what it actually is. Stripped right down to its absolute core, a credit score is simply a number that shows how well you manage borrowed money. That's it. It's a track record, like a financial GPA. If you pay on time and use credit responsibly, that score goes up, and lenders see you as a safe bet. But, if you miss payments or use up too much of your available credit, the score goes down. Why? Because to them, that signals risk.
All right, that brings us to our blueprint. Step 1. This is the golden rule, folks. Pay every single bill on time. Seriously, this is non-negotiable. Your payment history is literally the most important piece of the puzzle when it comes to your overall credit score. Even one missed payment, just one, can leave a nasty mark and drag your score down. So to guarantee success here, you got to set calendar reminders before those due dates. Or, actually even better, just set up automatic payments for at least the minimum amount due. Paying on time consistently is hands down the best way to prove to lenders that you're a responsible borrower.
Now, what's really interesting about this next part is, well, once you're paying on time, step 2 is all about capacity. You need to keep your credit card balance low. A lot of people, and I mean a lot, fall into the trap of using way too much of their available credit limit. If you max out your cards, you look incredibly risky to lenders. Instead, you want to safely keep your balances below 30% of your total limit. And hey, if you can keep it even lower than that, absolutely do it.
Moving right along, we have step 3, pay more than the minimum payment. Sure, paying the minimum keeps you out of the penalty box and prevents late fees, but paying extra? That is the ultimate secret hack to lowering your balances faster. If you have the cash flow to do it, always pay extra. It rapidly reduces your credit utilization, which directly and quickly helps boost that score.
Step 4 is really all about pacing yourself. Please don't apply for too many credit cards or loans all at once. Why? Well, because every single time you apply for new credit, lenders usually check your credit report. This triggers what's called a hard inquiry. Having too many of those hard inquiries in a short span of time, that can actually hurt your score. It makes you look desperate for credit. So before you fill out that application, take a beat and ask yourself, do I really, truly need this new card right now? Now, step 5 might actually surprise some people. Keep your old accounts open. You see, the length of your credit history totally matters. Older credit accounts help your overall profile look incredibly stable and mature. If you have an old card just sitting in a drawer somewhere and it has absolutely no annual fee, keeping it open and managing it responsibly might actually be helping your score. The only caveat here is discipline. Don't keep a card open if having it around is going to tempt you to go on a shopping spree.
Step 6 is your defensive strategy. You've got to check your credit report. Believe it or not, millions of people have outright mistakes sitting right there on their reports. It's crazy. You need to actively search yours. Look for wrong balances, weird accounts you definitely didn't open, or incorrect late payments. If you spot an error, do not ignore it. You should immediately dispute it with the credit bureau and get that junk removed. And wrapping up our core strategies, we have step 7. Whatever you do, avoid maxing out your credit cards. When you get super close to your limit, the credit scoring algorithms essentially flag you as financially stressed. Now, if your balance is already high right now, take a deep breath. Don't panic. Just focus on chipping away at it. Even reducing your balance little by little, month by month, will absolutely help improve your standing.
Okay, let's move to something a bit more practical and see how this builds. Let's make this real with a super simple math example. Imagine, just for a second, that you have a credit card with a $1,000 limit. Got it? keep that number right there in your head.
So the crucial point here is applying that 30% rule we just talked about. 30% of 1,000 is $300. That means your absolute ceiling, your line in the sand, should be $300. Staying under that $300 mark keeps you safely, comfortably in the green zone.
But what if you're already way over that? Let's say your balance is currently sitting at, I don't know, $700. The secret is not to get completely overwhelmed, but to just pay it down slowly. Maybe you skip a few coffees and find a way to pay $100 extra this month, and then you do it all over again and pay another $100 extra next month. It might feel a little slow at first, but that small progress absolutely matters, and it signals exactly the right behavior to the credit bureaus. And this brilliantly illustrates our whole approach. Let's stack these habits together into your simple action plan. Pay your bills on time. Keep those balances low. Try your best to pay more than the minimum. Limit your new credit applications. Keep those good old accounts open. Regularly check your credit report for errors, and absolutely avoid maxing out your cards. Remember, improving your credit, it takes time. There's no magical overnight fix. But stacking is exact habits guarantees you will move in the right direction. Because ultimately, at the end of the day, your credit score isn't just some random number assigned to you by a computer. It is a direct reflection of your daily financial habits. So I'll leave you with this one question. What habit will you change today? Commit to using credit wisely, paying on time, and just staying consistent. If this explainer helped clear things up for you, make sure to follow Cash Control 360 for way more simple money tips to help you save, invest, and really grow your wealth. Thanks so much for joining me.